Hello, everyone. Welcome to an Eltoma Corporate Services webinar. Today, we're going to talk about doing business in Singapore. Please let me know if you can hear me properly, and if not, please leave your comments on the chat box. Also, if you have any questions during the presentation, please also leave your questions on the chat box, and I will try to answer them as soon as I can, maybe even by email. Today's presentation is basically going to cover general aspects of Singapore as a jurisdiction for doing business. I'm gonna explain to you about the corporate structure and the tax implications, and basically what are the key benefits of doing business in this jurisdiction. My name is Alvaro Rivero. I'm a legal specialist, and I've been focusing in Singapore for the past year already. And I have extensive work experience in corporate law and tax law. And that is why I'm very interested in Singapore, as it has become a very interesting jurisdiction for the last 5 years or so. So we're gonna explain a little bit about the key benefits of Singapore to you now. So the agenda for today is Eltoma Corporate Services in Singapore. What are the companies and how is the company incorporation procedure in Singapore? I've had some people asking me what is the applicable law for companies in Singapore. We're going to cover that as well. We're going to talk about company maintenance and what are the requirements and what are requirements of keeping a company once incorporated in Singapore. And also we're going to talk about the tax treatment in Singapore. Briefly, we're going to cover the key benefits, and I'm going to go over some interesting facts about ICOs and cryptocurrencies companies in Singapore. I think that is one of the key benefits of this particular jurisdiction, along with Switzerland and other jurisdictions. Singapore is a key player in this industry, so we are going to talk briefly about what's been going on in the past few months and why I think Singapore is a very important jurisdiction for all this this rising industry. So let's talk a little bit about why Singapore. Singapore Eltoma Corporate Services has established direct presence in Singapore due to the increasing benefits of this jurisdiction for international business. Comprehensive legislation and straightforward tax treatment has facilitated the operations of many companies already in Singapore and has attracted the attention of many others for doing business in the region and internationally. Singapore is a high-income economy with a gross national income of $51,880 US per capita as of 2016. And despite having confronted a severe unemployment rate, poor infrastructure, and housing shortage only 50 years ago, today Singapore has one of the highest rates of gross domestic product growth in the world and has remained steady since 2014 to date, with a registered growth of 2.4% per year and a negative rate of inflation of negative 1.4% for 2016. This further displaying the actual improvement of the economic development of Singapore, not only in the region but also worldwide. The World Bank rated Singapore in second place on the worldwide ranking for doing business, with the lowest average of human resources, time, and cost necessary to incorporate a company in the region. Although Singapore holds the second place in the worldwide ranking for doing business from 2018 all over the world. So it's one of the best jurisdictions, easiest jurisdictions to incorporate a company basically in all around the world. So what is the legal system? Singapore, being a Commonwealth nation, has the common law legal system in place with roots in English law. Singapore regulates companies under the Companies Act, Chapter 50, and subsidiary legislation under the Companies Act. The regulator of companies is the Accounting and Corporate Regulatory Authority, ACRA, before which the application procedure will be performed and approved. And also, many maintenance obligations are also performed under ACRA. Under the Companies Act, the different types of companies are company limited by shares, company limited by guarantee, or unlimited company. A company limited by shares can be subdivided in private limited liability company or public limited liability company. The key difference between these two figures that is the ability to transfer shares and the allowed number of shareholders. In a public company, different than a private company, the shares have no restrictions for being transferred and there is no maximum number of shareholders allowed. The standardized legal form of a private limited liability company, which can be incorporated in only 7 working days, has a restricted transfer of shares in accordance to its own memorandum and articles of association, and it must have a maximum of 50 shareholders. Obviously, for the purpose of this webinar, we will focus our attention in the private limited liability companies. Private limited liability company is a separate legal entity in its own right. Therefore, the shareholders of the company are not liable for the company's debts beyond the amount of share capital they have put into the company, meaning the investment amount. The name of a private limited liability company has to include the following abbreviation: PTE Ltd. To incorporate a limited liability company is required to have the approval of the company's name, summary of business activities, details of the directors and shareholders, a registered address in Singapore, and details of the company's secretary. There is no minimum paid-in share capital requirement. However, we always recommend having at least 1,000 Singapore dollars in paid-in share capital. It is required to have at least one director, which must be a Singaporean citizen or resident, and one shareholder that can be either corporate or individual. Lastly, it is mandatory to have a register office in Singapore and a company secretary resident in Singapore. The company secretary is responsible for filing the information with ACRA and retaining important documentation as the registers of the members or directors of the company. Moreover, a company can qualify as exempt private company under a private limited company if the company has no more of 20 shareholders and none of the shareholders is a corporation. Qualifying as an exempt private company can have certain practical benefits, such as being exempt of appointing an auditor and having its accounts audited if the annual revenue is lower than 5 million Singapore dollars, lower compliance requirements, more freedom in financial loan activities, and tax exemptions granted under the startup category. Company maintenance. Singaporean companies are required to hold annual general meetings, or AGMs, and file their annual returns with ACRA containing all the information of the company and its financial account reports under Section 175, 197, and 201 of the Companies Act. It is responsibility of the company secretary to file the annual returns electronically via BizFile within 30 days after the AGM. The first AGM must take place within 18 months after the incorporation of the company, and every future AGM must not have an interval longer than 15 months between AGMs. Under Sections 175(1), if the AGM is held late, a penalty of Singapore dollars 300 shall apply to the company, and if the annual return is submitted late, a penalty of Singapore dollars 300 as well shall apply to the company. Obviously, this all lies in the responsibilities of the directors and the company secretary. That is why it's very important to be able to choose the appropriate company secretary and to have a constant and active relationship with the company secretary in order to avoid these kind of penalties in the future. So what is the tax treatment in Singapore? The tax residency in Singapore is determined by the place for the management and control of the company's exercise. Singapore applies the territorial tax principle. In other words, the corporate income tax will apply only to the income with source in Singapore. Dividends obtained from branches of a Singapore company are not taxed in Singapore as long as the dividends have been taxed at source on a rate of 15% or higher. Additionally, losses may be carried forward indefinitely to reduce future years' tax liability. Notably, Singapore operates a one-tier corporate tax system, where the corporate income tax paid by the company is final and the dividends paid to the members are not taxed. The corporate income tax currently applicable in Singapore is only 17%. Moreover, 75% of the first 10,000 Singapore dollars and 50% of the next 200,000 Singapore dollars of normal chargeable income are exempt from corporate income tax. In the case of exempt private limited liability companies, for the first 3 years of assessment, an exemption of corporate income tax on the first 100,000 Singapore dollars and on the 50% of the next 200 Singapore dollars may apply. As mentioned above, there is no applicable tax on dividends, and there is also no withholding tax on dividends paid by companies resident in Singapore. On the other hand, interest paid to a non-resident are subject to a 15% withholding tax, unless there is a double tax avoidance agreement in place that can reduce this liability. Furthermore, royalties paid to a non-resident are subject to a 10% withholding tax unless there is a double tax avoidance agreement in place that can reduce this liability as well. In Singapore, the tax regulator is the Inland Revenue Authority of Singapore, IRAS, which has also issued guidelines on transfer pricing applicable in Singapore. In general, Singapore applies the arm's length principle to transactions between related parties. The tax year is generally a calendar year, also referred to as the year of assessment. Singapore companies must submit an estimated chargeable income to IRAS within 3 months from the end of their financial year end. Similarly to other jurisdictions, Singapore applies an indirect tax on the sale of goods and services, just like the VAT. But the name is different. It's Goods and Services Tax, GST, with a standard rate of 7% and zero rate for exported goods and services. Nevertheless, financial services, sale and lease of residential property, and import of local supply of precious metals are exempt from GST. Every company with a turnover higher than 1 million SGD, Singapore dollars, is required to register for GST and is required to file a GST return on a quarterly basis. Regarding double tax avoidance agreements, or DTAs, it is important to note that Singapore has concluded 84 DTAs, and additionally has signed limited treaties, the Multilateral Convention to implement tax treaty-related measures to prevent base erosion and profit shifting from the OECD, has also signed exchange of information agreements, Convention on Mutual Administrative Assistance in Tax Matters, and international tax compliance agreements, such as the Foreign Account Tax Compliance Act, or FACTA, from the US, Common Reporting Standards, and country-by-country reporting. This further shows and demonstrates that Singapore is not a tax haven and is basically a largely compliant country with international law. To enjoy the benefits of the DTA, it is necessary to obtain a certificate of residence, or COR, and submit it to the foreign jurisdiction to prove that the company is a Singapore tax resident. The certificate of residence is a letter certifying that a company is tax resident in Singapore for the purpose of claiming tax benefits under a DTA. Since June 2017, all certificates of residence applications have to be filed online via my tax portal. I have the link. If you ever need the link, please just let me know and I will type it in on the chat box. The certificate of residence can be applied for the current year of assessment, for the next year, or up to four previous years of assessment. The procedure for obtaining the certificate of residence can take up to 1 month. Let's talk about why specifically Singapore. Conclusively, the reasons to incorporate a company in Singapore are many, from the ease of doing business to the tax treatment and the solid economy. Singapore certainly is an attractive jurisdiction for international business. The territorial tax treatment and the one-tier corporate income tax of only 17% and allowable exceptions during the first years of operations have made Singapore the first option for many startups worldwide. Moreover, the wide range of DTAs in place have also greatly impacted businesses. Decisions to incorporate in Singapore allowing companies to enjoy the advantages of the DTAs and avoid being subject to double taxation in their operations. Another key benefit of Singapore is the high levels of transparency and access to information. Both IRAS and ACRA, important regulators of companies in Singapore, have transparent and up-to-date information online and are always reachable by phone or email to answer any inquiries that may arise. Even if the company is still not incorporated in Singapore, it's very easy to have access to the regulators to ask any questions that we might have. Personally, I've asked a few questions to the regulator directly, and they always reply to me without any delay. In other jurisdictions, such as Singapore, the regulation has taken similar steps as the US to regulate ICOs and token issuing. That is a key point that I would like to point out to you so you also understand why I believe Singapore is one of the best jurisdictions to do business in. With this rising industry of token issuing or ICO or blockchain technologies, many companies that are starting up and they are looking for a best jurisdiction where they can start their businesses and basically incorporate their company. And we found that basically the US has a certain approach, which is the Howey test, in order to understand whether a token is a security or not, and, and therefore to see and analyze how it will be regulated under US law. Many other jurisdictions have taken similar approaches. The same happened with Singapore, but Singapore is also very active with the blockchain technology. As you might have heard already, they also have a project Ubin that is in collaboration with R3 as a blockchain and inspired technology company and a consortium of the world's largest financial institutions such as and Bank of America, JP Morgan, HSBC, and others. They're all cooperating with basically the regulator and this company R3 to basically establish well, the main aim of the project Open is to evaluate the implications of having tokenized form of the Singapore dollar on a distributed ledger and see the potential benefits to Singapore's financial ecosystem. So the regulator itself is trying to be involved in blockchain technology, and obviously that leads us to believe that obviously it will not take the turns as China did in blocking any ICOs or the use of cryptocurrencies. On the other hand, it will definitely push this industry forward, and it has taken some regulatory approaches. Basically, it stated that well, it issued some guidelines on on how it will be. The regulator will see the ICOs, and it's very similar to the securities regulations. And there are a few points to take into consideration. Such as well, if your token issuing will be regarded as a security, there are certain exemptions that can apply on the requirements of the securities regulations themselves, like the offer is small and personal. In other words, having a pre-identified person with previous professional experience or other connection with the issuer. Um, the offer is a private placement offer to not more than 50 persons within any 12-month period, or the offer is made to institutional investors only, and the offer is made to accredited investors. Basically, when going completely fully public, then you are under the regulations of the securities law, but which are not complicated at all, are very straightforward, and the mass has already been issuing licenses, specific licenses for this type of businesses. So Singapore is definitely up to date with technology and all of the new industry that is coming up, and is always trying to keep the regulators and themselves up to date. Um, so that's why I think it's another key benefit of Singapore itself. Doma Corporate Services already has an office in Singapore, and we provide different services such as incorporation, maintenance of a company in Singapore, banking and finance, and opening a bank account, obviously in Singapore, which is very important for different services, and bookkeeping, accounting, tax planning, IT and web services. Sometimes banks may require a newly incorporated company to have a website to open their bank accounts, so we can also help with that. And software businesses, especially for accounting purposes, we also provide a full range of services that can help companies keep their accounting and bookkeeping properly adjusted. Web and marketing services, legal services, as I said, and especially in this new type of regulation that is coming out, we are keeping our professionals up to date. Immigration services, if company owners would like to relocate to Singapore, that is something that we can definitely help with. Licenses and permits, all different licenses and permits that are available in Singapore right now for different type of businesses. We can also help with that in liaison with the regulators themselves. Yeah, we also have another project which is recruitment. We also help companies to if they are looking for people to work in their positions, and we can also assist them with the recruitment process and find them the right candidates for their businesses. And on the other hand, we also have the Cyprus real estate and immigration through investment projects, where we have a wide range of portfolio properties, basically, that are available. You can look at the properties at eltoma-property.com. And if you have any questions regarding the properties or the immigration through investment, please do not hesitate to let us know. Thank you very much for your attention, and you can contact us through email or by telephone. And please let me know if you have any questions on the chat box on the left, and I will try to revert to you as soon as possible. Thank you and have a good day.